Hey everyone, it's Operation Education here, and let's face it, we've all stared at those two bank account options online wondering, what's the difference between a money market and a savings account? Honestly, they sound kinda similar, right? It's like choosing between a latte and a cappuccino. Both are coffee, but with subtle differences. Well, today we'll dive deep into the world of money market and savings accounts, breaking down the jargon and those tiny details that actually make a big difference. By the end of this video, you'll be a pro at choosing the right account for your unique financial goals, whether it's saving for a down payment, building an emergency fund, or just parking your cash somewhere it can grow a little. So grab your coffee, tea, or whatever beverage fuels your financial journey and let's get right into it. Alright, let's talk about everyone's favorite topic, interest rates. I mean, that's why we put our money in these accounts in the first place, right? To make some more money. Now, when it comes to money market accounts, they often come out on top, especially if you've got a decent chunk of change to deposit. Think of it like this: the more money you put in, the higher the interest rate you might snag. It's like they're rewarding you for being a high roller, which is kind of cool. But here's the catch. Interest rates on money market accounts can fluctuate a bit. They're often tied to market conditions, which means they can go up or down depending on what's happening in the economy. Now, savings accounts, on the other hand, are like that reliable friend who's always there for you. The interest rates on these guys tend to be more stable. They might not be as flashy as the money market rates, but you'll have a better idea of what you're getting. So, if you're looking for something predictable and don't mind sacrificing a little bit of potential growth for that peace of mind, a savings account might be your jam. But let me tell you a little secret. Some banks offer high-yield savings accounts. These are like the overachievers of the savings account world. They offer higher interest rates than your typical savings account, sometimes even rivaling those money market rates. So if you're all about that savings account life, but still want to maximize your earnings, definitely shop around for a high-yield option. Okay, so you've stashed away your hard-earned cash, but what happens when you need to access it? Life happens, right? You might need to pay a surprise bill or finally book that spontaneous weekend getaway. This is where the whole access to funds thing comes in. Money market accounts are generally pretty flexible in this department. They often come with check writing privileges, which is super handy for paying bills or even people directly, and some even offer a debit card so you can swipe away without having to jump through hoops. It's like having your cake and eating it too. Savings accounts, however, tend to be a bit more reserved. You can definitely access your money, but it might take a little more effort. Some banks have limits on how many withdrawals you can make per month without getting hit with a fee. This is usually because they want to encourage you to actually save the money, not treat it like your everyday checking account. Now I know what you're thinking, what about online transfers? Well, both money market and savings accounts usually allow you to transfer funds electronically to your other bank accounts. It's quick, easy, and usually free. Thank goodness for technology, right? But here's the bottom line. If you value easy access to your cash and don't want to be limited by withdrawal restrictions, a money market account might be your best bet. But if you're someone who needs a little extra nudge to keep their spending in check, a savings account can act as a gentle reminder that those funds are meant for a specific purpose. Okay, let's talk about minimum balance requirements. You know, those rules that banks have about how much money you need to keep in your account to avoid pesky fees. Money market accounts tend to be a little stricter in this department. They often have higher minimum balance requirements compared to their savings account counterparts. It's like they're saying, hey, if you want to play in the money market sandbox, you gotta bring a decent-sized shovel. Savings accounts, on the other hand, are generally more relaxed. They might have a minimum balance requirement, but it's usually pretty low, sometimes even as low as a few bucks. This makes them a great option for folks who are just starting out or don't have a ton of cash to park in an account right away. But here's the thing, even if a savings account has a low minimum balance requirement, it doesn't mean you should just leave it at that. Remember, the goal is to save money. So try to contribute as much as you can whenever you can. Even if it's just a few dollars here and there, it all adds up over time. Alright, let's talk about liquidity. Now that might sound like a fancy financial term, but it basically means how easily you can access your money when you need it. Both money market and savings accounts are considered to be pretty liquid, which is a good thing. It means you won't have to jump through hoops or wait weeks to get your hands on your cash. However, there are some subtle differences in how you can use these accounts. Remember those check writing privileges and debit cards that come with some money market accounts? Well, those definitely add to the liquidity factor. You can use those bad boys for everyday purchases, or to pay bills without having to transfer money around. It's like having a hybrid account. Part savings, part checking. Savings accounts, while still relatively liquid, might have those pesky withdrawal limits we talked about earlier. Now, this isn't necessarily a bad thing. In fact, it can actually be a good thing if you're someone who struggles with overspending. Think of it as a built-in discipline mechanism. So when should you use each account? Well, if you're saving for a short-term goal, like a down payment on a house or a new car, a money market account might be a good fit. You'll have easy access to your funds when you need them, and you might even earn a little bit of interest along the way. Savings accounts, on the other hand, are great for long-term goals like retirement or your kid's college fund. They offer a safe and secure place to stash your cash, and those withdrawal limits can actually help you stay on track with your savings goals. So, there you have it, the lowdown on money market and savings accounts. At the end of the day, the best account for you depends on your individual needs and financial goals. Just remember to consider factors like interest rates, access to funds, minimum balance requirements, and how you plan on using the account before making a decision. And hey, if you're still not sure which one is right for you, don't be afraid to talk to a financial advisor. They can help you weigh the pros and cons and make the best choice for your unique situation. Don't forget to like, subscribe, and drop a comment about which account you prefer. Happy saving!